Hello, profitable CEOs, and welcome to Say Yes to Profits TV. I am your host, Octavia Connor, CEO of Say Yes to Profits, and today we're going to have a special edition of how to use QuickBooks Online. I'm going to show you how to write off bad debt. Bad debt is normally from a client that refuses to pay. Maybe you've exhausted all possibilities and you've reached out to them several times, several different ways, and they are refusing to pay your invoice, and you no longer want to see that open invoice on your books. I'm going to show you step by step on how to clear that invoice, that balance from your books. So I'm going to go ahead and share my screen and we'll get started. So the first thing that you want to do in order to write off bad debt expense is that you want to go to this screw icon here and you want to click on Chart of Accounts. Then you're going to click on New and you're going to select the expense category. And for the second drop-down box, you're going to select Bad Debt. QuickBooks is going to automatically populate the bad debt name for you here, and you can include a description if you like. Then you will click Save and Close. The next step is to add bad debt as one of your products and services. So you would, again, click on the screw icon, click on Products and Services, click New. You're going to select Service, and you're going to type Bad Debt. You can also include a description if you like, but you're not going to include a price for your sales price and rates because it's going to be based on the invoice that you need to write off. In the income line item, you're going to select bad debt. That is that expense account that you just recently created. The next step is to click Save and Close. Now bad debt is included here on your product and service line, and it's also included on your chart of accounts. So it's going to appear on your financial reports. Then you want to go to the customer that you're gonna write off. For the purpose of this example, we're just gonna select any customer here in our sample customer list. So say, for example, we have this amount that is due, $239, and the customer refuses to pay. You're going to go at the top where it says New Transaction, and you're going to select Credit Memo. Once QuickBooks have the drop-down screen, you're going to change the date to today's date or the end of the month. So I'm going to click June 30th, and now I'm going to select Bad Debts. I can then write it's for invoice 237, and I don't really know what the invoice number was, but I'll just say invoice 237. You want to write some type of description here just in case you have to go back and take a look at it. So we'll just put that there, and the amount $239. Now you want to not have your tax selected. So if this box is automatically selected, you want to unselect it there. There we go. And then we're going to click Save and Close. So now this customer has a credit memo for $239. Now, normally QuickBooks will automatically select the open invoice, which it looks like it has done it here. If you see that credit memo, it has, here it is, it has selected $239 and applied it to that open invoice that we had. But if it had not automatically applied it to that open invoice, you would go in and apply that credit memo to that open invoice, effectively taking it off of your books. If you have any QuickBooks questions, then make sure you leave your questions and comments below, and I'll create a video showing you how to operate QuickBooks Online. This has been Octavia Connor, CEO of Say Yes to Profits. See you again soon. Toodles.